All right, good morning, everybody. Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. Today is Tuesday, so that means it is time for the live trading session for the public. I have a couple charts pulled up here, being the DXY, the S&P 500, and Bitcoin on two different time frames. We are currently watching support at 16968. That is intraday support, followed up by a daily support that is literally $2 under that. So this is the level at which we would potentially want to be a buyer. We have the New York stock market open happening in about 20 minutes, 19 minutes to be exact. Typically, we haven't really done much for the last couple days. Yesterday, we did have a slight down day, and the S&P 500 actually pulled into its area where, if we're going to see support, we would want to see support happen here. So more or less, I'm more structured or biased to the upside. So we are going to be looking for upside trades. All right, so with that being said, why am I looking for those upside trades? Well, I am so glad you asked. If we bring over the TOS platform, Thinkorswim, let's expand this chart. Excuse me. All right, so here you can see last week we were looking for an upside move on the SPY when it traded down into the open or the low end of the options expected move. So every week, the options market prices in what they think the move will be from low to high. So basically, this week it was $6. That means from Friday's close, which is that black line right there, they think that the market's going to either move $6 higher or $6 lower. Coming into today, you're trading roughly, what is that, 399.72. So you're trading just a little bit up off of this right here. So a spike down into that would be okay. But the problem that I have with that is I absolutely would not want to see that, especially if you get an hourly close below support. Now, we do know that traps exist. Just give me 1 second here. I do all of my charting, literally all of it, on the other platforms. So the only thing I use this platform is for entering and exiting positions. And that's very, you can tell very much just by watching. But anyways, yeah. So anywhere down in here, we're not really looking for shorts. So I know today, here is the S&P 500. It does look like it wants to go lower, right? I mean, we had a big down day on non-farm payrolls, and then that move was bought right back up. So in a sense, this move for non-farm payrolls was faded. Unfortunately, we were live during this, but my electrician decided to cut my power. I had asked him to wait until 9 a.m. so that would give me 30 minutes to take a position and let you guys take the position as well. But he accidentally flipped the wrong breaker and cut my room off, or cut my office off. So there wasn't no sense in going back, because once you traded down into that area, there was no coming back, right? It was already too late. There wasn't a second opportunity. It was either wait for this spike lower and then look for buying opportunities. We did take that long on Bitcoin, but you can see it faded all the way back the entirety of the move and then rolled over. So what this is if anybody did take the short trade early before the news, right, they were right. Hopefully they took profits on the move lower, because if they didn't, as price got all the way down here, they more than likely dropped their stop losses to right above that wick, and then price was faded all the way back up there, and then boom, took out any stops of early shorts. If I ain't mistaken, that was also a daily high. It was. So made a fresh daily high, traded sideways, and then we opened up this week, and it's had a pretty one-sided move straight down. So yeah, it does look bad, right? Here you are, you're trading well under last week's open, which is typically not what we want to see. But you are coming into an area of old resistance. Old resistance, this red candle is also known as demand. It's just a demand zone. We don't know that there's demand here. I mean, we know that there was demand here because once you made this candle, the very next week you traded away from it, and then even further than that, moving on into the week after. So trading back into this area is an opportunity for people to look for long trades if the weekly low is in. If this is the weekly low, then it should start to trade away from that area, and we should get another expansion towards the upside. Now, on Bitcoin, I said this morning that it looked like a short was setting up, and that was from this level here. But I do have a long bias, right? If you wanted to take that short, it hasn't really amounted to anything yet. Here was the tag of resistance right there. So that's the operation area. That's the area where traders are operating. This down here is the area where traders are operating. So hopefully on the open, this thing will wait a minute, come back down, and at least test support, or at the very least test the close of this candle. If it does, we can get long, and we can use this wick right here to manage our risk upon. All right, so that's what we're going to kind of wait on here. If the move has already happened, we are not we are not ever going to chase price. That is not what we do. We just wait for our setups. If we miss the setup, that is okay. That just means we wait for the next day. It's no big deal to miss a trade. There is literally a setup almost every single day. All right, so anyway, that weekly demand level is also at roughly the SPY's option market expected move. So there's something to the strategy. Naturally, you can see how the daily candle yesterday was a pretty brutal one, taking out the previous day's low. So if that was the objective, target was hit. It was completed. Today, you have a very small range inside day for any newer traders here this morning. Just simply means that you're trading inside of the previous day's range. This is your previous day, and that's from high or to low. All right, so high to low. You have not breached yesterday's high or low, therefore you are an inside day. It's a very small range day as well. Back to the hourly time frame, you can see it's just simply trading sideways. So how would that translate to this if we wanted to buy it? Well, we would want to be on the SPY. We'd want to go out a couple weeks, 9-10 days, somewhere along them lines, and then look to buy 399 calls. That is if we're bullish. If you are bearish here because you think the world is going to end and the markets are just wrong and it's just a bear market rally, then you would be looking to buy puts. Where would you want to buy those puts? Well, you would want to buy those puts somewhere close to resistance. You have an intraday resistance level right there, but you have another resistance level right here. So far, your resistance levels have been declining, which is consistent with lower lows, and you did get a lower low right there. So you've made a fresh daily low on the S&P 500. 1800 hours is the opening for the daily candle on the futures market, because futures trades 24 hours a day. So 1800 hours, that would have been 8 p.m. Eastern Standard Time. This candle opens, and then, 6 o'clock Eastern Standard Time, set in a daily high. Then you go up, but you don't take out the daily high. You set a lower high. This also set the low of day. So a little bit later than London, you got the London session right now, basically saying that they think that the high of day is in. All right. So, well, to be fair, either the low or high of day is in. But this low right here was taken out by this candle. So as far as current market structure looks, it is a little bit more bearish than bullish. So like I said, if you have a bearish bias, $4,001 is where you're looking for entry. The unfortunate part about that short is, first off, it's already been hit multiple times. Secondly, your target has already been hit. So the trade to the downside has already taken place. Now, that doesn't mean that you should take a long trade since you missed the short trade. But I honestly think that this is going to be an up day. Over here on the dollar index, you can see, but it doesn't mean it will, guys. Please understand something. When I say I think something's going to do something, it literally has no bearing on price. It literally does not mean anything. That's just what I think. Okay? It doesn't mean that it will. Always, the market does whatever the market is going to do. Our job as traders is not to predict the direction of the market. Our job as traders is to find high probable areas to take trades, to put risk into the open marketplace, and then take out profits. And then that's what our job is, right? We put trades in at specific places, and then when we get into profit, we take that profit and we take our stops and we move them to break even. Because if we get a random market violence wick or a random market violence spike and we get stopped out, our job was already completed successfully. What you are trying to do as a trader is make small base hits consistently throughout your career, and over time, you will be profitable. It does not matter the direction of the market, because there has been many, I would say probably an overwhelming majority of the trades that I have taken, even though they worked out to be successful, meaning I added P&L to my overall funds, I added profits to it, my P&L equity curve is moving higher. I was on the wrong side of the trade, right? Because I ended up getting stopped out and price went the opposite direction. We just know what those areas are. We know where the operating ranges are for that, for those high likelihood or high probable scenarios. So we can make money even if we're on the wrong side of the trade. Naturally, that doesn't work out all the time, or I would have a 100% hit rate. And that is something that I just do not have. Oh, Mr. Aaron, thank you for joining for 20 months, my friend. I appreciate you so very much. Lovely. Awesome. Thank you guys so much for being here. So we got a little bit of time left, 5 more minutes, and then we're going to have the New York session open, and then we will see what's good. Like I said, as of right now, I'm looking for potential entries to the upside. We got Bitcoin currently making that. I don't know if the SPY is going to get back down here. That's that weekly level there. If we go see where our daily support is, you can see that you are currently trading under it. So right there is the support, the daily support. So basically what that means is if we do become bearish, this will likely be the target. All right, likely be the target. So anything above the open is good. $400 strike calls, $399 strike calls, and we want to buy them a couple weeks out, like I said, to give the trade time to work out. Now, my financial situation is obviously going to be different than your financial situation, so I do not want you to 100x your account. I do not want you to buy your entire account worth of calls, because that is not the correct way to do it. The correct way to do it is to buy as many as you can to risk only that premium. So that way, if you lose all the premium, you've only lost 1 to 2% of your overall equity. I understand that, they're a little bit expensive, $700, that's a little bit of money just for one, so you would have to have, a pretty substantial amount of money in your trading account to be able to do that. If you are going to risk your entire portfolio on calls because you just don't have that much money, then please find a price that you wish to exit those puts. All right. You wish to sell them back to the market, or calls. You wish to sell them back to the market, so that way you do not suffer a complete account destruction. You just want to lose as little as possible. I would say if they're going for $7 a piece, then if you can get 600 out, then you've lost a substantial amount of that, an amount of that, but at the same time, you will live to fight another day. All right, so yeah, let's see what happens here. I'm afraid the Bitcoin trade might have already happened. We've already took entries. Like I said, Friday I took a bullish entry on this. I basically bought Friday's low, or Friday's wick. Let's go back over here and I'll show you. Where is it? I believe it's here. No, that's Monday. Where is Friday? Okay, right there. So basically, I bought this wick. Like I said, we only want to implore this strategy, the liquidation break strategy. That's when you liquidate either the high or low of the day, or the previous day, and then you just take the opposite trade. It's called a fade trade, if you will. So when this move happened, I just simply faded it. I got long and it worked out. I took profits, moved my stop to break even. That position is still currently open, just barely. Almost got stopped out over the weekend, but didn't quite make it. So that position is still on. However, if we get a stab back down there, I will look to potentially take it again. So we have lost the correlation with risk assets Bitcoin has. So basically what that means is it used to trade pretty closely to the SPY or the S&P 500, and it's not doing that anymore. So yeah, current daily resistance on the dollar is 105.29. Go over here and see if that area ends up holding or not. So you can see intraday, you did make a fresh daily low right here. So there is the opening bell. So let's see what happens. We want to minimize this. Oh, here is the SPY. We'll have yesterday pulled up, and this is pre-market, post-market yesterday. And then this red line is daily support. So we want to see that level hold right there. This is a 15-minute chart. I got the small time frame over here, the 5-minute. But we'll see how this plays out. Down here's what you're looking at currently for, like, to see if you get a tag of that level. which would be okay for me as long as we don't break down, as long as I don't get like a nasty breakdown. Let's see, does that show up? It does not. What price is that? 397.02. So that's well under here. Yeah, I don't know if I'd want to see it get all the way down there. Daily support is here. It's coming off of that right there. So we want to see that daily support hold. And so far it is looking like it. So it would be the 399s or the 400s. And currently they're trading for $6.29. That is the ask price. So if you wanted to buy it, you would have to pay the higher fee, not the smaller fee. That's just how the markets work. Good morning, everybody. Good morning. Good morning. Have I done NASDAQ already? No, I have not. We just got started. Just getting started here. I'd love to see the DXY find resistance and roll over, as it has been. And the trend is down. So you can clearly see it, right? Since we, took our position here, it's been a pretty much one-sided trade. Bitcoin's purchase would have been right there, as that is your daily support level. So that's all I'm trying to do, right? Is show you guys consistently over and over and over again how this strategy works. And it eliminates all of the garbage that you've learned already from watching other YouTubers, head and shoulders patterns, stuff like that. You can just toss all that stuff in the trash because it's garbage. All you got to do is watch your objective levels, and you will get entries, and sometimes those entries will be literally the best entries that you could possibly imagine. So let's put the SPY up here, because we know that if the SPY starts to rip, then the dollar is going to roll, right? The SPY starts to rip, then the dollar is rolling. The SPY dumps, then the dollar is going to go up, and then we can always look back over at it. So this is Bitcoin on the hourly. Taking a position here isn't my favorite place to look for that entry. Here is a better place to look for that entry. And we do not want to see an hourly close under it. An hourly close under it is suggestive that you're going to see further downside. So just keep that in mind. So the buy on that, on the Bitget platform, well, yesterday's close, which is also today's open, you have another, that price is going to be 16,969. So it'd be buy right now. Get in a little bit late. You don't want to chase it. Stop loss. If this candle turns green again and starts to move away, your stop loss would just simply be under that wick. But you can be on the safe side and get it under daily support, like down in here. All right, so that's what you're doing there. Once again, on the SPY, you're looking for 399s, 399 calls. All right, so if you do buy the 399 call, how far do we let it go before we resell it back to the market? I would say 398, 397, somewhere in there. You're going to lose a couple bucks on the trade, but that's trading. Sometimes we make money, sometimes we don't. On the 5 minute time frame here, you can see Bitcoin just traded back up, nailed the midpoint roughly of that down candle, and we will see if the buyers step up. Here is your current point of control. So it's not great. It's not great. I rarely like to take a trade when the point of control is literally smack in the middle of the daily range, because it could indicate that, pretty much price can go either direction, right? Either direction. I'm going to put this back over here. Let's see, what do we got? We'll take the 400. All right. So let's see what happens here. We are currently long Bitcoin. When we tag this down in here, long Bitcoin, long the SPY. So if I'm wrong, I will exit that position and we will be done for the day. If I am correct, then we will let it ride for a little bit. Profit target on Bitcoin, 17,035. The reason for that is the resistance level. Daily resistance is $17,108. It is possible that it gets back up there. The problem is, we've already been up there and we have rejected. So essentially what you've done here on today's candle is you've opened, made a low, went up last night, came really close to resistance, and that's where you rejected, trading back down to the open of the day. That's where support seems to be holding. I say seems to be because, well, we just don't know, and we won't know with time. Well, we won't know until we've had time. This is another area that can absolutely act as resistance. So if the 5 minute stops here and rolls back over, then we're going to be wrong on our analysis. But by taking profits there at 17,035, if it gets up there, then that means, it could go ahead and roll back over. We'll be fine, as we would have already taken profits. Now, I know people are going to say that this is a very small move, because a lot of people told me that or at least one person on Twitter was talking about how they don't see how anybody can make money trading in such tight, narrow ranges. There's this thing called leverage. And if you apply leverage the correct way, you do not need a big move in order to make money. A 1% move on 20x leverage is a 20% gain to your portfolio, regardless of how many dollars Bitcoin moved. Okay, that's how leverage works. 1%. 1%. A 1% move on 20x leverage is a 20% gain. The S&P 500 breaking down here. So it might want to make a fresh daily low and then reverse. We will see. This is the old area of potential resistance. That's also that weekly level there, weekly demand, if you will. And on the chart, so you could, like I said, on this, you could push all the way down to there because that's where this is right here. So if you want to wait for price to get down there before you try to take any long entries, you can. You can absolutely do that. I see no trouble with it. We do typically like to see this for the first part of the week. So even though it's going down here, I'm not too concerned yet. We'll see. That's 396. So that means that'd be a $4 loss on the call itself. But we'll see if it gets down there and if it indeed holds a support. Very nasty candle. So it's probably only a matter of time before Bitcoin does the exact same thing. You see how I mean, I'm showing you guys these operating ranges so that way you can do this stuff yourself. You don't need to pay for nobody's courses. You don't need, if you are paying for a course, you can quit doing that. I mean, this stuff works. Are you going to hit every trade? No, you are not. So this is going to be yesterday's low here. You didn't quite get there. Bitcoin's still not breaking down just yet, but it may. Just please, please, please protect your downside risk. Please. Do not set in a losing position for very long. Absolutely not. We want to get our money and get out as quickly as possible. Sometimes the market just doesn't allow you to get what you want because it goes against you instantly. I don't know of any bad news or anything like that that's going on right now. I really don't care about the news that often. Typically, all I'm trying to do is get in, get out, and then if there is any continuation after that, you know what I mean? Then we just consider that icing on the cake, if you will. Right? But we don't look for continuation. We don't expect continuation. Hi Heath, glad I joined the hedge fund tier of Patreon, but didn't get access to the Discord. Ali, I will look as soon as I'm done with the live stream. If you did it like in the last day or so, you might not have. There is the low. Yesterday's low has been smoked. Where are we currently on? How far away are we currently from? All right, and this is getting really close. But Ali, I will send you the link. Do me a favor, look inside of Patreon. Underneath your profile picture on Patreon, there's a spot that says messages. Click on that and see if I have sent you a message. That is your Discord link. Because I get the notification when people sign up for the hedge fund tier. And then typically what I do is I send them the Discord link through that message. I can't send you the link through email for whatever reason. It does not work. All right. So just go on in there and check your messages. If you don't have a message, I promise you, you will at the end of this stream. Or I can go look now. Just give me a second, because I have to pay attention to this trade. Just bear with me, and I will get you that link. So this is our targeted downside move right there. We want to see it. Oh, shoot. This platform is so clunky to use, man. We want to see this be about as low as it goes. You know what I mean? I don't think that you would get a run down to that 396 area, as that is technically demand. So if we take out the entirety of last week's range, then that's going to look bearish to me, not bullish. But the structure is still okay. It's not the greatest. If you fib it, you're gonna find out that you are well under the 618 and all that good stuff. So just hang on a minute. Oh, perfect. Right into the 702. So this is about where I would expect support to come in at. About. Right. And then we would want to see it, all this entire move get faded. You know what I mean? Want to see it set in a low day and then slowly start to migrate back to the upside. We start taking out lower prices, meaning if we make this low and then we, trade up for a little bit and then 15, 20, 30 minutes or whatever, and then come on down and make a fresh low, then I will exit that position. All right? Because then clearly it's not doing what I want it to do. And if it's not going to do what I want it to do, then I do not want to set in a losing position. Remember, the reason that I am not sweating this move right now because I bought $400 calls is simple, right? I'm willing to risk the entire premium I just paid, okay? I'm willing to risk the entire premium of the account. That's about roughly 1% of the total equity. So that's my risk. I don't have to close the put or the call out ever, even if it just goes all the way down to $302, right? There won't be much premium left on it if it does do that, but I'm willing to let the entirety of it expire worthless. And then that means I will take a 1% loss, just like a standard day trade, right? But I give it time, especially when it's at the bottom end of the options expected move. Now, something about the options expected move that you guys should be aware of is during heightened volatility, these areas will break, right? During heightened volatility. So when you have a lot of volatility, they will not hold. So like if you were bearish on Thursday of this week right here and you decided to get short either at daily res, which would have been what, 382, or at the top of the options expected move, as you can see here, you got stopped out. And not only you, a lot of people did. And the very next day, you got upside continuation. So this is a short squeeze. When this occurs, that is exactly what is happening. People are getting short there, and then this day comes up, breaks out above, and then you get, another day or two of squeeze action, and then it closes strong on the week. So that's what occurs. The same thing will occur here, but to the downside, right? So if you get under this, and you get under this, you'll probably see an outsized down move due to all the stops that's getting triggered. Bitcoin moving up to the profit target. If you did indeed buy that support at 16,969, Bitcoin is looking pretty good. You want to take your profits on the Bitget platform. That is going to be $17,034. So what you can do is you can take your profit target, go ahead and put a profit limit order, taking profit limit order in at 17,028, just under the high of this candle, just under it, just in case it doesn't get there. All right. Right now, with the leverage and everything that I have taken on this trade, here is where I'm long, right there at that white line. I am currently up 9.02% on the P&L. So remember, just because it's a $5 move on Bitcoin or a $100 move or whatever, a $70 move, you can still make money. That's what leverage is for. You lever it up. You'll know when you're wrong. You'll know when you're wrong. If you close an hourly candle under 16,968, you will be wrong. You close the position for a loss. It's that simple. $17,000 is also a big figure number. 17, 16, 15, 14, 12s, your 19s, 20s. Those are big figure numbers. So yeah, there could be a lot of people selling their Bitcoin at 17 grand. So it is a difficult number to get through. So yeah. But we already know, based on the data that we have currently, this is the operating range. You're either going to be a seller at $17,035 or you're going to be a buyer at 16,968. It's the range the market has determined, predetermined already. We call that here in the Trade Talk community your operating range. It doesn't matter if you have a long bias or a short bias, you will be a buyer here and you will be a seller there. If you want to go short, you'll sell here and you'll take profits down here, which once again, by exiting a short position, you are a buyer. And then if you want to go long, then you're a buyer here and you're a seller there. It's the operating range for traders. You'll know when you're wrong when you break down. See, like here was the operating range until this candle happened. And then what happened after this candle broke down? It's a bear trap. You traded way lower, but then up, and you took out the high of it. So what we're looking at here is, if this is indeed a trap, then we want to see this act as support. And then we want to see that expansion up. The SPY is not looking great. Not looking great. I would love to see it find support and start moving away from that low, because you liquidated the previous day's low. All right, you've liquidated the previous day's low, and yesterday liquidated this low. So all your lows are liquidated. as of right now. So if buyers are going to step up, then I would imagine they would start doing that soon. It does indeed look like the sellers hit the market on the open. That's where your point of control is. And also, this just boosted up right there. Did you see that boost? Right there. So I don't know if that's a limit sell that just came in or if that's an order that has been filled. What we want to see is we want to see this red line migrate down to here. But in order for that to happen, these volume nodes right here have to start building. They have to start getting longer. If that does not occur, then that means there's not a lot of interest down here. Go on down there, liquidate the low. There you go. So now we'll see if any buyers step up. Bitcoin struggling. So each high, each time you bounce so far, you had this bounce, you had a lower bounce, deeper push, and then a lower bounce. So as long as this thing keeps cruising to the downside, Bitcoin is going to do the same thing. That red line is about as far as we want to see it go. Right? But you set in a low of day with this, and then you bounced. You came back in for that final sweep. We'll see if it starts to migrate its way back up now. If it don't, well, I'll sell those calls, right? It's as simple as that. I don't have to eat an entire loss on the position, which is just 1%. I can exit it with a very, very small loss. Essentially break even. Tesla has a gap fill between 170, 172. You don't see a lot of volume building in here, but let's get Tesla up over here. Ooh, Tesla's getting pounded. Pounded like ground beef. Yeah, Tesla's under the levels we wanted to see it get under. So, and Tesla is on the lows too. It doesn't look completely terrible yet, but you're getting about as low as I would want to see it. Getting about as low as I would want to see it. So the SPY's not really looking like it's a buy just yet. I wouldn't buy it based on the Fibonacci retracement. The only way I buy stuff, the only way that I take entries is at objective price points, because Fibonacci is everything else, trend lines, all that stuff is subjective. Very subjective. Objective price points. So essentially what that means is if it finds a low down here, gets back above 179.83, then maybe the next day, like on Thursday, we could look for a retest of support to get long. But that, like I said, everything's going to hinge on basically how does today close? Like, does today close as a very nasty down day? If that ends up being the case, then this bull trap will reveal itself as a trap. Then that means we have to shift our bias to the downside. It won't be able to happen today. Naturally, we'll take a loss today, but we'll regain whatever we lose today on the next trade. We will get it back. But just give it a second here. We'll give it a few more minutes. It's not the price action that I wanted to see. What was the risk to reward on Bitcoin trade you just took? The risk to reward, it was a one. Well, I was looking for 2 to 1. All right, so my current stop loss is under that bearish hourly candle. I technically had a 2 to 1 on that, but I didn't take it because I was looking for it to get to the profit target. But the risk is here, right under that wick. That's my stop. And oh, it almost got me. Didn't quite get me, but it almost did. And now it got me. So I have been stopped out of the Bitcoin trade. We were looking at the short, but when I posted it in the Discord, it was too late. Price was already down here. So I can't chase it, right? I can't ever chase it. So it looks like it's going to be a pretty nasty down day here on the SPY. You're under, right there. You're under it. So we'll see. That's as low as we wanted to see it get right there. But we're not seeing any buyers step up. Instead, what we're seeing is like stops getting triggered. I would not buy it there. I mean, I guess one could, but it just depends on what's going on. Something could be going on right now, right? We did get some news. We didn't get no news today. Yeah, I mean, we did. We got the trade news, balance of trade. Imports, exports, but I don't think that's what's causing this. It is Tuesday, so this could end up being the low of the week, or the high of the week is already in, which would not fare well for risk assets. So essentially what we're watching here is this right there. All right, you're coming right into weekly support. So if you lose that, you lose weekly support in the 21, then this doesn't look that bullish anymore, right? And if that is the case, well, we can't do it next week because next week we have CPI and we have FOMC. So every bit of this move this week could get faded. That's what I said at the beginning of the week. If you're not following me on Twitter, make sure you do so. I do post stuff on Twitter. That is relevant. My handle is at trade underscore talk underscore. Please make sure you do the right one because there are many people impersonating me out there, unfortunately. And there's really not a whole lot I can do about it because finding the impersonators is difficult. Very, very difficult. I only find them when someone shows me them. But, anyways, and I mean, they still followers from me. I don't really care for them mocking me or, acting like me. It doesn't really matter. The part that bothers me the most is the fact that I struggle to maintain followers because of it. Like the last account we just had banned, he had almost 4,000 followers. That means if you put those followers to mine, then I would have almost 8,000 followers. But anyways, a new week, new opportunities. As far as high impact risk event goes, high impact event risk, it's a pretty muted week, meaning there's not a whole lot of news this week. Next week we will have CPI, then FOMC, so this week's range could be slightly muted. Wouldn't be surprised to see a pullback this week. We took out last week's high and are rejecting. That was my concern that we did that, right? Because typically, if you're bullish or the asset is going to remain to be bullish after taking out a significant high, and it was a significant high, trust me. Let's look at Bitcoin on the weekly. Let me explain this to you, because this is what this matters, right? So after you took out this swing high on the weekly, there is no other swing high to take out until all the way up here, okay? So there is no other weekly high to liquidate. So the fact that we did liquidate that high this week, we took out last week's high and rejected, that could indicate that we're going to see lower prices. That's why I said, would not be surprised to see this week be a pullback. But we are still very early into the week. And I know you guys are looking at this and you're thinking to yourselves, my God, he was so damn wrong. So damn wrong. Today ain't over. Today is not over. This thing could be trading at $401 by the close. I don't know if it will or not, but it could. All right. You're at weekly support. We'll see if that holds. You've went further than I wanted to see it go as far as fibbing last week's range, but at the same time, we'll see. Now, if we break down and we end up closing, like, say, down in here today, then yeah, my bias to the upside will change for next week and the week after. More than likely, I'll be looking for shorts. Bitcoin still doesn't look bad at all. Like, the pullback on Bitcoin is nothing. You haven't even tested the midpoint range yet. But Bitcoin still looks okay structurally. Structurally. I do not like that it did that right here. I don't like that. But as long as it finds support somewhere, you don't have any objective price points to look for support. But typically wicks for us are targets. They're not areas that we look to enter trades, but that's the only objective price point that you got. So we shall see here what happens today. Here is your SPY support. And that's a weekly candle support. Let's see what happens now. Like right now, if I sell that call back to the market, it'll be for a small loss, right? I'm not going to do that just yet. I need to see a further breakdown. Also, getting under the expected move is okay. It's if you drop off the face of the planet after that. That's when it's not okay. If you drop off the face of the planet, then that means something else is going on. That means that the marketplace is definitely looking for something else. More than likely, it's looking for this swing low right here, if that occurs. So, yeah, if that occurs, then we'll look for a retest up to support and we'll look for the short. Moving on. Because after today, at the end of today, I've seen it go as even high as Wednesday before, but usually your higher low of the week is put in by the end of Tuesday's trading day. Like 66 or 67% of the time. It's not 100%, but it's a high. It's a high thing. Like the probabilities are just high. So staying under this is no bueno. But remember, that's where the option market was pricing in the high. So the problem is that we had already liquidated the high for the week. That's what's got me concerned. All right. You've already done this right there. So they're really, to be honest with you, there's nothing for Bitcoin. There's no liquidity for Bitcoin to search for above these two highs, except for all the way up there. Now, if we go to the daily time frame, there are some daily highs, right? There's a couple daily highs that you can liquidate, but you can see with yesterday, man, you liquidated all of this with this wick by taking out that wick right there. You took out all of this. So the very next area for potential long side liquidations, 17,641. That does not mean that it has to go up there and get that. It just, usually I like to look at the higher time frames because they let me know like pretty quickly if it's going to go up and look to liquidate this, then I would have wanted to see after where's the highest wick? Here until there, right? This is the highest wick until there. So once we liquidated that, maybe one day pullback, I would have wanted to see this day be bullish. It did not happen. It did not happen. So the market found equilibrium right there. So it did not happen. That simply means that there's a pretty good chance that maybe the market's not going to liquidate 17,641. Maybe the market wants to come down here and liquidate this first. Boom. Then go up there. It's impossible to know what the market's going to do. But with our strategy, we don't need to know what the market's going to do. We have a very high hit rate. We occasionally lose trades, but we hit them more than we lose them. We make winners way more than we make losers. And that is why it's such a fantastic strategy. Over time, you will make money. That's a very, very nice reaction here. Unfortunately, it stopped me out. But nevertheless, it's a nice reaction. Now, I typically won't eat more than one stop a day. So if it does close back above that, would I buy it then? My answer is no. Remember, I am already long on 2 other accounts. So the only reason I got long today on the 3rd account was just kind of, showing you guys how I operate day to day. And if I do it like this, I continue to be consistent in the way that I operate. I'm continuing. Look at this. Look at this. This, baby. Yeah. Tell me that weekly freaking support ain't interesting. Look at Bitcoin. Look how it just right back up. I would not be surprised if this ends up being the low of day on the SPY. It doesn't mean it will be. So please, if you're buying it now, you might be buying the low a week, but you might not also. So make sure your risk is defined. Defined risk means you know exactly what you stand to lose. But if you do want to take the Bitcoin trade to the upside, again, if you did get stopped out, I recommend that you don't do that. My recommendation is that you take one trade per day. Wait for the higher probable setup, take the trade. If you get stopped out, then be done for that day. All right? Be done for that day. Then the next day, you have your bias, right? If we make a low of day on the SPOOs today, and then we end up closing on the highs, then you know that the market has probably made the low of the week, and now you're looking for pullbacks into support to buy. But if you close up here on Bitcoin, you got 42 minutes. Like, this doesn't mean anything right now. This means nothing. The close is what matters. So you got 40 minutes before the close happens. Could you buy a retest of 16,971? This candle's close. If this candle closes like up here, yes, you can. You don't want to buy it on the first pass, especially if it drops right through it. But when it gets back above it, you could buy it and then manage your risk against this wick low. So you're not going to have a good 2-to-1 risk to reward back up to this operating range target. But if that were to play out, chances are you're going to see a new high of day. And if not today, then more than likely tomorrow, we will get a run above the high. The problem is yesterday's high is way up there. Yesterday's low is just right there. And the fact that we've got this going on here, it doesn't mean, this does not mean that it's buyers. And if it is buyers, it does not mean that price is going to reverse here. You're well under that. Well under it. I would like to see it get above it soon and start trucking back to the upside. But we'll see. This just means that there's a lot of orders coming in here. The reason there's a lot of orders coming in here, guys, is because I am not the only person that trades this way. Other people trade this way because it is the way to trade. It's the successful way, right? It's the way, it's the things that you need to be focused on and learning. All the head and shoulders that you want to know in the world is not going to help you. None of it is going to help you. Cup and handles, none of it. None of that's going to make you a profitable trader. This stuff right here will. As long as you can manage your risk the right way, as long as, look at Bitcoin go. After stopping me out, going straight up there to our profit target. So if you were lucky enough to not get stopped out on this push lower, you want to be taking profits somewhere right in here, okay? Leave some on just in case you get any upside continuation. Leave some on, but definitely pay yourself for taking the risk. But this looks really, really good. Now, if only this thing would start to look like that. Let's see where the dollar went. Not quite to resistance. Oh, but you got daily resistance right there, so yeah, not quite to resistance. Sorry for the silence. I'm just watching price here. It's not the reaction I would have wanted to see either, to be honest with you, on this right here. I mean, people are putting orders here, but that could be sellers too. I mean, this is what's called an island top reversal. It's not the greatest looking pattern. I'm not a pattern trader, and I really don't give a shit about island top reversals and stuff like that, but this is typically not a bullish pattern. So now, looking at that, people will more than likely be trying to sell it at 402. Yesterday, boom, that came in and that set the low of day, but look at the bounce. You didn't really get a good bounce. We want to start seeing, we want to see what happened to Bitcoin here. We want to see the SPY do that, right like this. The same thing. Come in, set a low, and go. Yeah, if you guys don't mind smashing the like button, I really appreciate it. I appreciate it so much. 75% of my trades are zeros. 75%. That's not good, man. We need to figure out what you're doing wrong. You're clearly doing something wrong, man. And you know that it's possible because I come out here and I do this live twice a week. And then in the Discord, I don't trade every day either. But I'm looking for the higher probable setups. Like the most reason why I like to trade on Tuesdays is because I know that statistic is, Tuesdays usually the lower high a week gets set. And then for the rest of the week, we can just watch it, the weekly expand in our direction. If you could just take one trade per week, you would be able to outperform the S&P 500 on a yearly basis. That's the goal. The goal is to beat the S&P 500, no matter which direction it's going. I mean, it's going to be easy to beat the S&P 500 this year, even if you only finish the year out with 1% profit, because the S&P 500 is probably going to finish the year out in the red. There's probably no probably about it. The S&P 500 is red on the year. This is the DXY. It is not red on the year. Here today. Boom, there you go. So you got to get back above 47, 44. Let's just call it 46. Let's just say 47 in order to be green on the year. You're not. You're red. You're red on the year. So, yeah, you don't have to be in profit very much in order to outperform the S&P 500. That's a pretty big drop, though. We'll see if it gets it back. Like I said, this is not really the reaction I was wanting to see. I did want to see this. That's beautiful. Right at weekly support, but not the reaction I was wanting to see. I would have liked to have seen a big green spike and then another one. Nah, that's not good. That's why I said it. All of this does not matter. What matters is the close in 31 minutes. That will matter. Where is it then? I guess we don't need the daily up there, do we? I mean, pretty much under this, you're red on the day. So we can get rid of the daily chart. Got a fresh low on the SPY. Yuck. I can't imagine people would be selling there. I mean, I know retail loves to sell the lows. And there's a lot of like traders on YouTube that does stupid stuff like this. Wait for a breakdown and then they get short. But how do you manage your risk like that? You risk all the way up there, or do you just risk this swing high? If that's the case, then I guess you're only looking for a couple bucks tops. So Looks like maybe the high of the week's in. Bitcoin sellers. It's still not over. 11 o'clock, usually the higher low of days in. So we'll see. We'll see. If this thing's going to turn around, it's got to start doing it pretty damn soon. Otherwise, I'm going to exit that position for a very small loss and call it a day. But I would like to see a bullish reaction from here. Eventually. I mean, we've been here for 25 minutes. 30 minutes we've been here. People will buy SPX daily demand tomorrow. It's possible. It's possible. I was kind of hoping that it didn't even get to daily demand. Cause you're well under. You're well under the expected move low. But we'll see how it closes today. A nasty huge red day, man, and it's gonna look like there's going to be further downside continuation. Also, I did take a short on the Euro USD yesterday. I took a short on the Euro USD yesterday. Right in there. Just to kind of to hedge against that long Bitcoin exposure I had. And the short dollar exposure. Remember, I'm short dollar, so if the dollar is going to get a bounce, I'm going, which it's just unrealized P&L that I have left on the table. But the way that I hedge off that long exposure is by shorting the euro. So it ends up balancing itself out pretty evenly. I do bank gains because when I go into the trade, the very first entry it's levered up, right? I go in levered up because I'm trying to make consistent day trading returns. So I go in levered up pretty hard, but then I'll leave that unrealized P&L open until I get either stopped out or whatever. And then that kind of hedges the dollar short exposure because I have I have the short on the euro. So whatever gains I lose on the dollar as it's bouncing because I'm short the dollar, then I will get those gains from the euro short because the euro will be going lower. Just a way to maximize profitability. What I need you guys to do first is understand the strategy before I can teach you like ways to finagle and make more or less or whatever. Also, we had a terrible looking monthly candle on Bitcoin last month. What are you doing? Stop wigging out, dude. Yeah, it's pretty ugly. That's a pretty ugly candle. So, like, this same scenario goes with Bitcoin to the downside, right? If you're going to see more downside Bitcoin, then just let the candlestick show you that, right? This is your lowest low. So this low liquidated this low right there. So where's your next low? There. All right. So as a trader or as a chart analyst, as a price analyst, me knowing that this was liquidated by this wick, this is the next lower low to liquidate. If it's going to go down there, then after making this liquidation, I would want to see price stay under this. Because if price gets back above this, if it gets back above it, then that could be suggestive that price may be wanting to go back up and liquidate this. Okay? Those are our future targets for Bitcoin. 21,478 to the upside, 13,215 to the downside. So since we've liquidated that low, I would want to see continuation. And we've kind of gotten it, but not really. You know what I mean? And it's like, yeah, you got continuation, but you're bouncing right back up. So now that you've liquidated all the weeklies, though, if it's going to go and make that run back lower to there and then beyond, then it will probably do so now. It does not need to go up anymore. So if it wants to run the lows, then you can be a seller at daily res. If today closes bullish, then tomorrow you will be looking for pullbacks into today's close to get short. But this looks bad. Not the day I wanted to see on the spoos. A pullback, yes, but like that's as far as I wanted to see it go. A continuation lower is just max pain, literally. Not for me, but for other traders. I can lose the entire premium and still only lose 1%. So it's not me that people are suffering right now. It's other people. So why even sit in all that pain? You're wrong. I'm wrong. My trade thesis for today was wrong. So far. There's still a long day left, but it's not looking good right now. There's quite a bit of volume too. Still. So if we minimize this, well, here, I can just put the volume on over here. I mean, it's not terribly high, but you can see it's pretty consistent for the whole day. Usually for the first 15 minutes, you get like, 3 big spikes and then volume starts to wane. This is pretty consistent. Pretty consistent. And I don't really expect a 5-minute candle to bounce perfectly at that level. I mean, it's nice when it does, but doesn't have to, right? Doesn't have to. We won't know how much volume it is until the day is over. As of right now, there is 17 million shares traded. $17 million shares of the SPY have been traded. 17,200,000. And that's pretty good. That for this, I mean, for, yesterday you had 77 million traded all day. Bitcoin is still green on the day. So we'll let that 30-minute candle close. I mean that hourly candle close, and then we'll wrap up the stream. Because you know what you're watching for now, right? Like I said, guys, I'm not gonna close out this position unless it chops sideways all day. Like if it can't get any kind of bullish momentum today, then I will close that position out later on for a very small loss. But if it gets that bullish momentum, I'm not going to close it because I will be under the I will pretty much keep my thesis and hopefully see us trade at least and close back above 396. Let me make sure. The monitor's so far away, my eyesight's getting bad. Yeah, 396.62, 396.92 ish. So roughly right in here, that's about where the low end of the week's options expected move is. So a close back above that today will look okay. It won't look great, but it'll look okay. I won't short tomorrow either, though, because, like I said, being at the low end of the options expected move, closing back above it is going to look, better for upside continuation, not downside continuation. You're at the bottom of the expected move, so you don't typically want to look for shorts down there. If you are wanting to short it, then you want to short it at the top of the expected move, like over here, right? You didn't quite get up there, but that's the reason you came in Monday and Tuesday last week to the downside, because people were shorting at daily res. It came down and then up. So if this week's going to be like last week, then we would want to see this candle close above that red line. Preferably, we'd like to see this candle close green, as that would go a long way in saying, yeah, we're likely to see it expand up this week. But the first 2 days are bearish of the week. That's typically a good sign for bullish continuation for the weekly range expansion. And Bitcoin is still looking, that's not bad. If you took that trade, take profits. You did good. I'm proud of you. If you didn't get stopped out, right? If you didn't get stopped out. I figured having my stop below that low would be low enough. It wasn't. It went right below me there and got me. Moving forward for bullish entries later on today, you could watch this candle's close, which is 16,972. So if you get back down there on a pullback, you could buy it. But please understand that it doesn't mean it will go up. I cannot tell the future. I do not know what price will ever do. I've gotten to where I am because of experience and watching charts day in and day out for years and years. I like what I'm seeing on the dollar. That's beautiful. Because remember, this white line happens to be what? You guessed it. Daily resistance. So as long as we're not closing hourlies above that, because just because this candle closes under, it does not mean the next candle won't open and go, right? But it does look better. So we'll see how it works out. And this could trade sideways all day and Bitcoin could expand. Because remember, if Bitcoin is going to get, I don't know that it's going to get it back, but if Bitcoin is going to get the risk correlation back, risk on correlation, then it has some repricing to do to the upside to get there. So that's the whole point of me being even bullish on it, to get back to that risk on correlation. And it's got some room to go to get there. All right. But it's pretty muted week is what I was expecting this week. We've already moved much further than I thought we would, to be honest with you. And another thing, if this is mostly sellers right here, if, then when price, or if price gets back above that red line, you could absolutely see a nice bullish expansion, because these people who got short here at the bottom of the day will be getting stopped out just by price getting above this swing high, because that's likely their stop loss. So, but they're doing it wrong. They should not have shorted there. They should have shorted up here. Like over here on this chart, if you were looking for Bitcoin shorts, this would have been the first place to look. Last night at the open. Oh no, sorry. That was the other day. Sorry. Last night at 3 o'clock in the morning, which was what? The London session. You sat in. Not the high of day. This is the high of day. Right there. That's your high of day. But you set in a near-term top. Then you expanded lower, setting in the daily low. So if Bitcoin gets above this, any London sellers are going to get stopped out. So you could see that, a pretty rapid expansion to the upside. But I guess a lot of that's going to depend on, A, does the DXY fail at daily resistance? And does risk finally get the bounce? Is this the low of day? Or does it continue to make lows, new lows all day long as it trends lower and lower and lower? And if that's the case, like I said, I will exit that position. There's no point in me taking a full loss. I can just re-enter a new position tomorrow or today if I wanted to. Or if I honestly thought that price was definitely going to go up, then I could buy another set of contracts down here, right? Which I wouldn't want to buy the 396s because they're in the money. Wait, no, 396s are not in the money. So I could technically buy the 396s, and then if price does continue up, once it gets above 396, I'll be making money, and then ultimately when it gets back above $400, if it gets above, then I'll be making really good money at that point. But that's pretty much over leveraging my account, because if I'm wrong and it doesn't go back up there, then now not only am I losing the money on the 400 strike call, I will also be losing money on the 396 strike call. So I probably will not do that. Will not do that. And there's no point in realizing the loss on the $400 call just yet either. There's still all day to go. But I will be watching it diligently all day, because that's what I do. All right, so let me answer a couple of these questions, and then we'll wrap it up, because my breakfast just walked through the door. Got some Einstein Bros breakfast bagel. Hello from Spain. What's up, my friend? Oh, good. Christmas music. I don't think that was Christmas music. Good morning, Heath and Trade Talk team. Good morning to everybody. Took a long in the London on Euro USD at 104.85. Let's go look at it. You said you took a long. I am short. I got short yesterday on Euro USD, but took a long on Euro at 104.85. So here's London. Yeah, I think you did good, because because you follow me, right? You now know that the London session usually causes the low or high of day. You set in a new low during the London session, taking out yesterday's low. So yeah, just simply buying that, right? And then taking profits here is what you should have done. Now, if you did that and risked the low of day, you'll find that it was pretty much a perfect 2-to-1 risk to reward. Right there. See that? 2.45 risk to, so 2.5 risk to reward there on, betting that the London session was going to call the low of day, and it did. So far, it is still. All right. So yeah, you did good. Do I expect continuation? Well, I don't know. I never expect a continuation because I can't see into the future, right? I can't ever tell you if a trade's going to work before I take it or nothing like that. Do I like your setup? Well, technically, yeah, it's bullish, but you're getting long at the top of the range. Like, you've already had all of this expansion up. All right. So I don't know that this is going to be the top. I don't know that at all. I have no clue. But if it does end up being the top and you get stopped out, you're going to be like, why did I buy the top again? Right? But if you took profits, because that's what my strategy tells you to do, if you buy there, you sell here. No matter what. No matter what. Do not let your brain talk you into leaving the position open because you think you're going to make more money. That's not how this works. You got to take it as a systematic approach. Every single trade you take has to be consistent. It has to be consistent in the way you apply it. It has to be consistent in the way you look for it. It has to be consistent in the way you take profits. It has to be consistent across the board. Everything that goes into trading, you must be consistent. So that way you can look back in time and see if you're winning or losing. If you're losing, then you can make slight adjustments, tweaks to it. Because when you're consistent, you will end up becoming profitable. It's just a matter of time. But first, you got to build in that consistency. I liked the setup at London. Looking at it in hindsight, I would have taken it too, more than likely. But I would have took profits there and moved my stop to break even. So if it does break down, at least from here to here, I made my money and I'm done for the day. And then I'll wait for tomorrow to look for another setup, right? If you get upside continuation, then kudos. Like I said, that's just cherry on top, just icing on the cake. But we don't expect continuation ever. We don't expect it. Alls we're doing is getting in, getting out. And the same goes for the short side. So yesterday, my trade, short trade, was here. All right. We liquidated the high of day. Instantly, I got short. Instantly, the trade worked. Still sitting in that position. Where did I take profits? Here. So entry there, take profit there. Stops at break even. So if it does continue with the trend that it has been on and goes up, then I will lose the unrealized P&L. But I've already made money on the trade. You know what I mean? I can't lose money on the trade. It's too late. I've already booked gains, baby, gains. So my account is bigger today than it was yesterday. All right? That's your goal. That's what you're trying to do. You're trying to do that at least 2 to 3 times per week. If you can do that 2 to 3 times per week for the rest of your life, you're going to be rich. There's no doubt about it. You will eventually be rich because you can do what most people can't. And that's get into the market with a predetermined amount of risk, get out of the market with a predetermined amount of profits, and now you are risk-free. Being risk-free in the marketplace is the best way to be because no matter what happens, you cannot lose money on that trade. Now, if you did not take profits, you're probably beating yourself up right about now. Don't do that either. Don't beat yourself up. Just understand that you're in the learning process. But always, 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 always take profits, guys. You know where the operating ranges are. You are looking to enter at that operating range. You are looking to exit at the other side of the operating range, just in case you get random market violenced. That random market violence will tear you apart if you don't take profits. If you've already taken them, you're good to go. So, yeah, I mean, the setup was there, and it was good, and it worked out. So even if it comes down and stops you out, at least you made money on the trade. Now, if the dollar continues up and, S&P 500 rolls over again and continues to roll over, Bitcoin rolls over, then this is going to roll over. Because this is not correlated with risk markets, but it's the exact opposite correlation of the dollar. Oh, damn it. See how this wick here, how I said earlier, wait for this if you want, and then stop there? It didn't get there. People front ran it. It didn't get there, so damn it. But yeah, if the dollar rolls over, this will continue to go up, and then I will be stopped out once it gets back above 1.05893. But I already took profits, so If I get stopped out, the only thing that happened is I made money, right? But yeah, it's not a bad setup. It's not. Longer term, it's in a nasty downtrend. But if the dollar has topped out, which I firmly believe it has, then this will have more than likely bottomed out. And getting long there could mean that you got long at the bottom of the week. So you leave on that small piece for that potential, right? You do not ever try to take a full position size with your risk still in the marketplace to do that, ever. Because it doesn't happen all the time. You got resistance there you got to get through, and you've got resistance, well, there. You've also got supply here. So you got to get through both of those things just to get back up there. So yeah, it's just you bought it a little bit higher. I would have much rather you waited for a support test lower to buy. How low? A good gauge is the 21 exponential. When you get close to the 21 exponential, you start to look for daily supports that coincide with that, right? You don't have to wait for a test of the 21. Just let it get a little closer to it. Then get long. Because if you do that, especially if we do have a trend change on our hands, then you're going to be nailing this baby all the way up. All the way up. You're going to be making such fantastic trades. You're going to be like, damn it, I'm a pro. And you're welcome if that happens for you. I hope it does. I hope every single one of you that are in here right now end up getting what I'm saying and turn it into a profitable strategy for yourselves. Have you seen Brandon's rising wedge fractal? No. Listen, Brandon can look at what he can do things however he wants to do it, right? Yeah. I don't know what his intentions are. I don't know if he ever intends on being a full-time trader. As far as I know, Brandon's got a really good job and he's really good at his job and he likes his job. So, yeah, I don't know, right? Rising wedge fractals, that's not something that I look for or trade. It's completely opposite of what I'm doing here and what I'm trying to teach you. And that's going to be your problem, because I know most of you probably have 20 or 30 traders that you're subscribed to, and all of them are different. If it works for you that way, then do it to it, right? But if you find yourself struggling, then just focus on one way, get consistent at doing it that one way, and then watch your equity curve change. Have you read that? SPX kissed weekly high, get lower low daily demand before taking off higher. Yeah, I'm not sure what it's gonna do. USO big candle. Yeah, I'm done trading USO, Brandon or Brian. You can continue to trade it if you want. Yeah, I mean it's just that's all there is to it. That's all I can say. My target was hit. I made a lot of money on that trade, so good to go. Done with it. I needed to get away from the yearly opening range before I can do anything else with it. Also, they're talking about supply. They're going to limit the amount of supply. That's going to bring in demand. If there's no supply, then the demand will kick up. Higher demand means higher prices. Have you done NASDAQ already? No. We'll go look at it briefly, but I know it looks similar. Let's just try NDQ. See if Yeah, it's bearish on the day. Yeah, it's pretty much in the exact same spot the SPY's in right now. It's testing demand. Will demand hold? I don't know, but it's testing it. If you take out this candle's low, you're going to have a local top, or also known as a bull trap. But it's only on the daily, but it will be on the weekly as well. See that? If you get under this low, you're going to have a potential bull trap up there. And if that's the case, then our biases are going to change. This is something here. Yeah, I don't think you should be looking for longs on NASDAQ any longer. So this might change my whole fundamental approach, or at least for the next couple weeks. We'll see how this week closes. Does it close above or below this? If it closes below, we'll probably be looking for short entries somewhere around there, if we get a retest of that. If not, if we get a long, deeper push, we'll watch 11,677 for those short entries. But it definitely is under the 21, so it's not bullish. S&P 500 was bullish. Hola, remember to give Heath a like. Yes, please, thank you. Morning, Heath, I took a long and London. Read that. Hi, Heath, I joined the hedge fund here. Oh, yeah, Allie, I will take care of you just as soon as I eat my breakfast. That'll be the first thing I do. If I haven't already sent you the link, I will send you the link here in about an hour. Danny Elkov, I took that too. Took profit at 4-hour res. One for a stop loss, above break even. Look at you go, Michelle. Like a pro. Nice work. But I have improvement over each strategy. I still hold the whole position, but would have stopped at break even. Yeah, that's... Hey, if your stop's at break even, then you can't lose money. That's a good thing. But I would rather you take profits. I just would. And the reason I say that, I mean, it may work better for you to hang on to the whole position over time. With me, it didn't. Because a lot of times what would happen is I would be up, and I would be up big because I left the whole position on. And I'd be like, wow, this thing could go much further. I let my brain and my greed talk me right into holding on to the position. And then 2-3 days later, I watched it come all the way back down and stop me out. And that happened often, right? Like more often than I nailed those big winners. So now I do it this way. And by doing it this way, I have been able to see consistent returns. So it's just one of those things you'll have to learn for yourself. So keep doing you, and eventually you will get there. But good stuff. Bitcoin needs some milk, says Pepe the cat. Tesla has a gap fill between 170, 172. Looks like she wants to fill it. Yeah, Tesla's having a bad day. So is the SPY. I was completely wrong on that today. Completely wrong. But that's all right because our risk was mitigated. Beautiful. Yeah, it's not looking good. Struggling down here at weekly support. Struggling. So we'll see how it closes today. I joined the Hedge Fund tier Patreon, but didn't get access to the Discord. I have the same problem. Johan, your problem is a little bit different because you're running into an issue with a 4-digit code. Every single person that has joined the Discord, you have either already been sent a link, or if you joined yesterday, I haven't opened the Patreon up yet. So I will today, and I will get the rest of you links sent out. I promise you. You will get links today. I'm still working on your problem, Joanne, of trying to even figure out what that 4-digit code is, because nobody else ever gets that. Nobody else ever gets that. Right? You're the only one that I've ever heard that complaint from. So I'm Googling it. I'll figure it out. And we will get you on board somehow, some way. Thoughts on grid trading, asks Curation. Curation, I have no clue what grid trading is, unfortunately. The way that I approach life is, if it isn't broke, don't fix it. I built my strategy over several years, and it's not broken. So there's no point in me trying to add other people's strategy to it, because then, just trying to learn the strategy, at first I'm probably going to lose money. And then I'm so set in my ways with this strategy. Like I said, I can look at a chart usually and in 5 minutes see if it's even a setup I like or not, right? So, I mean, there's just a lot that goes into it. So I never checked it out. I don't know anything about it, unfortunately. I can't comment on it. Can't tell you if it's good. Can't say if it's bad. That sounds good too. I like the deal. Trailing the stop like that. Yep. Michelle, on the 10th November on Euro USD, I made 42 to 1 with this method. Nice job. What was the risk reward on the Bitcoin I took? I answered that earlier. 75% of my trades are zeros. I don't know what that means, but I'm up 40% for the month. Gotcha. People will buy SPX daily demand tomorrow, says Andrew. Hopefully. Ali says, how would you have put the stop loss at that Bitcoin trade? Well, I got stopped out of it. So I had my stop loss below this bearish wick right there. That's just where I put it, right there, because it was under support. This candle right here, support, it's the lowest support. It's also the bear trap candle. So I figured since we already tested support here, then we would probably be good. But I was wrong, because it went all the way to there. It went all the way to here, pretty much, right? So yeah, I got stopped out of it. I'm no longer in the Bitcoin trade. I'm still holding SPY puts, unfortunately, but I've been stopped out of that. Since there was no wick low during that hour. Yeah, I just explained it to you, right? All I'm trying to do when I put my stop loss out, when I get into a position, I have my target, entry, stop already pre-mapped out. I try to get my stop under support or under the lowest bearish wick. This is the lowest bearish wick, but if I would have put it under there, my risk to reward would have been significantly different, and I still would have been stopped out. This is what we call random market violence. It's a coin-eye term just because, yeah, that's just random market violence. It did exactly what it was trying to do, whatever it was doing. Yep, sometimes we get stopped out, and that's life. It is. That's trading. And guess what? No matter how good at it you get, you're going to get stopped out. You're going to get stopped out for as long as you are a trader. It's going to happen. Wouldn't doubt it a bit if it didn't happen once or twice per week. It's impossible to know what the market's going to do. That's why we have to put stops out. But the better at it you get, the more or the less stops you will eat. That's also a fact. I got long on that weekly support on the future side. Good job. Just keep an eye on it. This isn't what I wanted to see naturally. Also on the hourly, the point of control is still well up there. Oh, that's on SPY. On SPY, the new point of control was there. But on the SPX, it's not. You're going in to make a new daily low as we speak, which is typically not bullish. Typically not bullish. I got long on that. Oh, read that. How often do you define risk on options, though? Me, all the time. I do not take an undefined risk trade ever. 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 If I am entering risk into the marketplace, my risk is defined. Always. Always. If I'm selling options, like if I'm doing some kind of straddle position or something like that, but I'm selling to get the premium, I still will mitigate that risk by buying a put or a call under it. Now, that limits the amount of profitability you can make, but when you're selling options premium, you can only make the premium anyway. So, but if it's like a one-sided spread, a spread trade, but I don't take the other side of the spread. I just take like one side of the spread. Like if I'm going to sell, for instance, today, if I wanted to sell these puts under there, I'm glad I didn't because naturally I would be wrong. But if I wanted to sell puts under that, then I would buy another put, another put just below it. So that way it maximizes the amount of risk, limits the amount of risk I can make or lose. Sorry. But when you do that, essentially you're hoping the long put pays when you do a trade like that. So essentially what you're doing is you're using the premium to fund the position. See, once you understand this, just being able to analyze charts, technical analysis, the correct way, the way that I do it, once you're able to do that, a whole world of strategies open up for you. You can sell options premium and not spend 1 cent of your P&L to do it, right? But for me to teach people how to do options and everything else, it's that Discord had cost a lot more than $25 a month, because that's a lot of work. It's taken people years just to get to here, just to be able to identify high risk or high probable scenarios. Then to learn all the nuanced stuff that comes with selling premium and buying premium and all that. It's crazy. Like I've seen some people's windows from their options trades, some pros that put together these strategies that are like insane, and they didn't spend 1 cent for it. End up making tons of money off of a trade that they weaseled themselves around to where they didn't even have to spend 1 cent on it. It's insane. The spectacular things that you can do with options. You can sell options premium for like a living, right? To have consistent money coming in. Some option selling strategies have a high hit rate of up to 90%. The problem is the risk to reward is always skewed to the wrong side. When we do technical analysis, we're looking for a 2-to-1 risk to reward, meaning we're willing to risk 1 to make 2. Well, when you're selling options, you're usually risking 8 to make 1. Does that make sense? You get so many hits, though, but you will have that one loss. And that one loss, if you don't understand how to manage your trades, roll stuff out, do this, do that, you're going to eat a big loss that's going to wipe out, most of your gains for the year. So selling options premium is extremely risky if you don't know what you're doing, because you have unlimited risk. Unlimited. Is it too soon to cut the loss on the SPY? No, you should cut the loss on the SPY, because I don't know what you're risking. I have no clue how much you're in the red right now. I don't know. I can tell you one thing. This is not doing what I wanted it to do. It is under where I wanted it to go. It's further south than I needed it to go or wanted it to go. And now that it's under it, it's not getting that bullish reaction. It's not showing me that there are buyers here yet. So, like I said, when you take the calls that I give you, please make sure that you're not risking more than 1 to 2% of your total account's equity. ever. That's on you to manage the amount of money that you could possibly lose, not on me. I can sit until the premium expires and I will only lose 1%. You see what I mean? I can let the premium expire worthless and I will not be phased at all. Whereas you may be in a severe amount of pain right now. I don't know. So, what I would do if I was you is maybe give it one more chance to take off. If it doesn't, cut your loss. Cut it. If you can afford to lose the entire premium as well, then you can give it a day or so. But if it don't get bullish today, if it doesn't close back above at least 3970, I'm going to cut my losses. How do you take profits strategically on puts? I mean, at resistance, right? Or a rejection of resistance. Well, I'm just buying the call or put at the level of resistance that corresponds to the strike. So if I have daily res at $400 and I want to buy a put because I think it's going to reject there at $400, then I will buy a $400 strike put. How do you take profits? The same way, right? You buy 3 contracts. When your profit target gets hit, you sell 2 of them. You leave 1 on. And you don't have to put a stop out because you're risking just the premium at that point. And if you've already made money on 2 of the puts, that money is going to more than compensate for the amount of money that you lose on the one that goes worthless. Why is the point of control so different on SPY versus the SPX? It's because it's 2 separate entities being traded by themselves. So the SPX it's not even the E-minis. This is a CFD product. So the point of control is coming from Oanda. Oanda is the company or is the exchange that currently offers this product. So they're giving you their data. Whereas the SPY is coming from New York Stock Exchange, the NYSE's data feed. 2 different data feeds, my friend. So you will get different volumes on different data feeds. Just got on. What was the trade you took today? I lost money on Bitcoin. I took a long at support here, and this wick stopped me out. I am still setting in a loss on the SPY. I bought $400 strike calls. Where is it at? I bought $400 strike calls when we were down here. And as you can see, those calls are losing money. So today was a loss on both trades I took. But like I said, that risk is mitigated already. So I can set in this trade for a few more days to give it time to work out. I bought it 10 days out. I bought the 16th of December expiry, 400 strike puts. I paid $6.30 for them. They are currently selling for $4.76. So I've lost $2. That's $200 on every contract. And Ali deleted the message. Does that mean it's time to cut a loss? Yes. Yeah, if you're losing money, you can cut the loss for sure. Always. Don't ever sit in a loss. There are some very bullish CBD forming around here. Pepe going long, says Pepe the cat. Pepe is the name of my cat for anybody out there that's wondering if, what's going on there. That is my cat. He is a mod in the chat. Cad Swissy just took out 2021 low. Yeah, I saw that, Aaron. Heath, would you take trades and exit always, always 2/3, or would you modify 100% or less accordingly? No, I always, always 2/3. Or like here, what I've been doing on Bitget is I've just been exiting 70% of the position. That's rough. It's not quite 2/3, but it's close, right? So what I do is on my take profit limit order that I set out, I set it out to close 70% of the entire position. That leaves the other 30% of the position on with the leverage. So what ends up happening is if I get continuation for a few days, weeks, or even months, that trade is still pretty damn jacked up. You know what I'm saying? It still makes quite a bit of money in the long run. So here is the USD trade, USD JPY. Just to show you 2/3, I sold this with 3 lots. 3 lots. All right. The amount of money that is currently on the position, $10,380. I took profits more than that on this day. So on this day right there, I closed that out and made a grand total of about 13.5. 13.5. So if this continues to go down lower and lower and lower and lower for months and months and years, I'm not saying it's going to, but this trade will end up paying me far more than the original first trade. Far more. That's why I do it this way, right? I hope to get the continuation because the continuation will make your entire year. In some cases, make your entire year. If you're able to sit in a trade for multiple months and it just continues to go in your direction, that trade will end up paying you a lot of money. Thoughts on UN? What's the plan for SPY? Says Nii Bisari. The plan for SPY is we are going to watch it today to see where it closes. Let me bring up the chart. I want to see it close above this today. This is the low edge of the options expiry low edge of the options expected move. I would love to see it close above that today. And if it does, then potentially tomorrow we'll take another position on it, looking to buy daily support, and daily support will be wherever this thing closes. So if it closes like up here, tomorrow, if you get a gap up, I will look for the on the open for it to trade down to this candle's close, and I will look for bullish entries there, expecting the weekly range to continue up. And thoughts on Uni? Looks very similar to Bitcoin. It has done the exact same thing as Bitcoin. You have liquidated all of your weekly highs. That was the highest week right there. So you are done, more than likely. If it's going to be bullish, it needs to find support and start to rip soon. Because when I see a liquidation like that, I typically want to see continuation the next day and the next day as to indicate that short squeeze. But when you liquidate an old swing high like that, and then you fail, and then you can't get nothing going, that tells me that sellers were sitting there and you don't have demand. So the sellers that were here were more than likely not stopped out, and new sellers entered here. So until demand can kick up and get it get it going, then you're probably not gonna see a short squeeze, and you're not gonna see that that momentous rise. Instead, what will likely occur is it will roll over. And that's not what we want to ever see. But same scenario goes for here. Where is price compared to the liquidation zones? You are much closer to last week's high than you are last week's low. But since you liquidated this, you do not have to go back and get that. This right here did the job. And since you did this, you have not been able to get back up there. In fact, it's probably a short right there. Depending on what Bitcoin does today. This is weekly resistance as well as daily resistance. You got two confluences there, weekly plus daily resistance, and you factor what I just said about liquidating the other week. That doesn't have to go up. If this thing struggles or fails there, I will short it. Let me see if I can short it. Real quick for anybody that's new, we've already lost most of the people that were here, but for anybody that's new, hang on one second. Yeah, I can. So I can short it. I will short it. Potentially. I'm not going to short it if it just blasts right through that level. All right. I need price to show me that that is indeed going to be resistance. And if it is going to be resistance, then I may look to take a short position on it. Yeah. All right. I got it situated. So, yeah, if this level acts and holds as resistance, $6.26, I will be shorting it. And I will have a near term primary target of 6171, secondary target 6088. TNX. What is all this? Yeah, I mean it's gonna do like what the dollar does. This chart looks almost identical to the DXY. I think the top is in. I think that's going to be your top. Right there. That's just my opinion. It doesn't mean that the top is in. It's just my opinion. I think the top is in. Does it look blow offy? Yeah. This one candle right there liquidated 4 weeks of price action. That's pretty bearish. Not quite as blow offy as the dollar, but since you did that big candle, you've had nothing but downside continuation. In fact, this is the first week you've had in 4 weeks that's even been bullish. So you might get a bounce for a little bit, but I expect that bounce to be sold off again around 374. Get back up there, might be a selling opportunity. ETH at 1245. Take profit 1256. Let me look at ETH for you, Pepe, and then we'll wrap it up. Nice. Nice. You did good. You caught the damn low. Awesome. And there your take profit level is absolutely perfect. That's absolutely where I would have taken profit too. Good job. You're understanding. That means you are learning. Thank you so much. That's fantastic. I love to see it when you guys are learning and earning. You guys have a fantastic rest of your day. If you're new here, please make sure you hit the like button and subscribe, as we put these videos out twice a week, and occasionally I'll put out just an upload about what I'm looking for next week on Saturdays. Not haven't been doing them recently, but on the days that my girl works, I do them. So yeah, just make sure you guys subscribe to the channel and all that good stuff. Also, there is a link in the description for the Bitget exchange. If you want to trade on the cheapest exchange in the world, use my link, and please use the referral code XTSC. That is X-Ray Tango Sierra Charlie. I don't, they're running a lot of specials all the time. I mean, they're a fantastic place to trade. So far, I haven't had any trouble with them, but please, 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 just put an amount of money you don't mind losing on exchange until everything gets better. We got to be as stingy with our money as we possibly can be. All right. They got a leverage slider all the way up to 125x. So you can put a small portion of your trading capital over there, lever it up to the mountain, and that way, if you blow the account, you've only lost a couple percent of your overall trading funds. It's a fantastic place to be, and you can also get to play with a lot of leverage without absolutely crushing yourself, right? Just be smart about it. But the link's in the description. Thank you all so much for your time. We will be back Tuesday, same time, same channel, same place, looking for new trades. Gonna do it all over again, and that time we will make money, more than likely. Yeah. All right, we'll talk to you guys Thursday. Make sure you trade safe, make sure you trade smart, and as always, happy trading, everybody.